Welcome to The Economy magazine at I-24 News, where we give you a daily view on global business and innovation. I'm Natalie Ehrlich. Well, coming up, Rand Corporation puts a price on the value of peace. And a centuries-old industry in Bulgaria comes down to the petal. But first, let's start with headlines. Well, brighter economic news in the U.S. pushed stocks higher on Wednesday, especially in tech and financials. The Dow Jones Industrial Average rose some 236 points, or 1.3% to 18,000. Its biggest one-day percent and point gain since May 8th. The flight to stocks comes as investors turn away from bonds. U.S. and European economies appear stronger, and the perception that the Fed will hike rates as soon as September is sending investors away from the safety of government debt for equities. A notable shift here in market psychology post-financial crisis. Well, another sign of change, the World Bank trimmed its global economic outlook on Wednesday, warning that developing markets, the engine of global growth in recent years, would get set back now by lower commodity prices and higher borrowing costs. The bank now expects the world economy will expand 2.8% in 2015, down from its January forecast of 3%. Nonetheless, it maintained its predictions for 2016 and 2017 at 3.3% and 3.2% respectively. Well, the Bank of England is getting tough on market misconduct, extending maximum sentences from 7 years to 10 years. According to the B of E governor, bankers found guilty of market wrongdoing would be held directly responsible for any failures. Managers could even get slapped with big fines if abuse is found under their supervision. Well, S&P has cut Greece's credit rating a notch further from CCC to CCC+. The ratings agency predicts Greece will default on its commercial debt within the next 12 months. And with the outlook negative, Greece's short-term credit rating is unchanged. And we finish now with a boost of optimism from China. Beijing reporting industrial output up 6.1% in May from the year earlier, a sign that the global economic powerhouse is stabilizing. Well, industrial output reflects production at factories, workshops, and mines. And the results seem to show now that government stimulus is working. In the first quarter of 2015, China's economy continued to slow, GDP expanding just 7%, the worst quarterly results in 6 years. Well, shifting back now to the Middle East, Rand Corporation, a Washington-based think tank, recently put a price on just how much peace in the Middle East is actually worth. Ellie Hockenberg explains.
If moral, diplomatic, and cultural incentives were not enough to solve the Israeli-Palestinian conflict, a new study suggests another very good reason to end the long-standing feud. Billions and billions of dollars. According to a Rand Corporation study, a peace agreement would be worth no less than $123 billion to the Israeli economy over the first 10 years, whereas Palestinians would be in store for a $50 billion windfall. In terms of monthly per capita income, the Palestinians would see an expected 36% rise, whereas 5% growth is predicted for Israelis. The study looked into 5 different scenarios: a two-state solution, a coordinated unilateral withdrawal, an uncoordinated unilateral withdrawal, non-violent resistance, and a violent uprising. The results were unequivocal. The economic benefits to both sides vary greatly based on their levels of cooperation. For example, in the case of another violent uprising, per capita gross domestic product would fall by 46% in the West Bank and Gaza, and by 10% in Israel by 2024. The Israeli economy alone would face a loss of about $250 billion in economic opportunities. The effect of an Israeli withdrawal from the West Bank also depends on the level of coordination. If coordinated with both the Palestinians and the international community, the effect on the Israeli economy would be almost irrelevant, while the Palestinians would gain about $8 billion over a decade. If uncoordinated, an Israeli withdrawal from the territories could cost Israel $20 billion due to the need to unilaterally reincorporate settlers. In the case of non-violent resistance, mainly comprising existing international economic pressure and call to boycott Israel, an $80 billion loss for Israelis is expected, with the Palestinians suffering as well, to the tune of $12 billion. The bottom line is very simple. The absence of peace is costly.
And now for a closer look at financial markets, we are joined live from New York by Lawrence Schreiber, co-president of Clarity Capital. Thank you very much for being with us.
Hi, Natalie. Thank you for having me.
Hello. Well, there is an old saying on Wall Street, sell in May and go away. Since we're just at the start of June, what's the meaning behind that?
Sure. It's actually kind of an interesting thing. Many years ago, kind of the old-time traders on the New York Stock Exchange realized that there seemed to be a pattern, that during the summer months, markets might go up and down, but by the end of the summer, they were pretty much where they had started out. So they had this expression, you sell in May, go away, take your summer vacation. Obviously, it might have been a little bit self-serving in the old days when you didn't have global 24-hour markets, an excuse to relax a little bit more during the summer.
So do you think it still has any merit here?
Well, what's so interesting is the pattern has been tested over a long time, and unlike many kind of old wives' tales or sayings that get expressed, there was some numeric backing for this. People looked at a study over 64 years of the Dow Jones Industrials, and the average return of the stock market every year was 7.9%. Interestingly, only 0.3% of that average return came between May and October, the summer months, and the 7.6% of the 7.9 actually came in the winter months between November and May. But like most things, it's not that easy. And in the last couple of years, with the big bull market that we've had for the last 6 years, the summer has rallied as well. So there have been gains in the summer and gains in the winter.
Well, interesting point. So is this one of those old pieces of wisdom investors should really follow now?
Well, again, I just don't think, unfortunately, investing is not that simple. People shouldn't follow simplistic rules. One of the problems with trying to time the markets is, number one, it's very difficult. Number two, if you sell, you're going to incur taxes on all your gains that when you then reinvest, you have to make back even more to get back the taxes that you paid. And there have been a lot of other themes in terms of how markets trade. In something called the January effect, where typically there was a lot of selling in December to lock in tax losses, and then a rally in January. And unfortunately, those themes just don't stay consistent over long periods of time. So people, for the most part, should keep a diversified portfolio and not try to time markets too much. It's extremely hard. So
this isn't the only calendar pattern that you're looking at, but what advice do you specifically have for investors this summer?
So, you know, we are at the very potentially end legs of what has been a very long and very powerful bull market, 6 years. So investors should, we're not saying that it's over. There still potentially could be some more to go, but investors should be conservative and diversified in their portfolios. If you had a very high allocation to equities, it's probably time to start bringing that down. And I wouldn't make your summer plans based on your investing plans. I would make your summer plans as fun and as exciting as they can be, and I would be conservative and thoughtful in your investing and probably not tie the two too closely together.
Well, thank you so much for your market tips. We do appreciate it. Lawrence Schreiber, co-president of Clarity Capital in New York.
Thank you, Natalie.
Well, now to the world of boutique commodities. In a labor-intensive process unchanged since the Ottoman era, Bulgarian rose farmers work hard to retrieve what the locals call liquid gold. Practically all expensive perfumes are made from it, and in pure form, a jar of this can fetch for more than $7,000 per kilo.
The sun has barely raised its head, and already these delicate Bulgarian roses have been gathered in their thousands. It's at dawn that the scent is most concentrated in the petals.
We only pick the fully open roses that are most oil-giving. The others we leave for tomorrow.
The arrival of spring heralds the rose harvest season, which lasts for about a month. Bulgaria is the world's largest producer of rose oil, second only to Turkey. It's thanks to the climate that roses have thrived in this valley for centuries after being introduced from Iran. It takes 3.5 tons of petals to produce 1 litre of oil.
It comes into this pipe. The so-called rose distillate comes into the container, into this container. After that, there is the second distillation, the cohobation, which happens in this cohobation column. And the produced double distillate goes into the Florentine container, where the oil, the rose oil, the precious Bulgarian rose oil, is separated. It stays on top since it's lighter, and it's extracted through here.
Then it's off to the capital, Sofia, for the next stage of production. Nikolay Nenov has been working in this lab for 50 years, certifying the quality of the rose oil produced. He's known simply as the Nose.
Rose oil expresses very clearly fixed properties and also has the special property of acting as an agent to unite a mix of other flavours.
But rose oil doesn't come cheap. This bottle's worth nearly 30,000 euros. And the name Bulgarian rose oil is now even registered and protected by the EU, suggesting a rose by any other name may smell as sweet, but these flowers are particularly special.
And for the stories we didn't want you to miss, I'm joined in studio by Daniel Roth. Well, thank you for being with us. What do you have for us today?
The Atlantic is our first stop. They have this very, very interesting look back at Occupy Wall Street. Of course, 2011 around the world was this year of uprisings, and in the United States, as well as here in Israel, there was it was really focused on economics. It was focused on inequality, and something that has been true for a long time, but was waiting for a voice to be found. And Occupy Wall Street, for a short time, was that voice. And people kind of thought, okay, they gave us the language of the 99% versus the 1%, and this kind of language, and then it went away. But this article is really saying, no, actually, it hasn't. When you look at all of the U.S., the candidates for U.S. president in 2016, all of their campaigns are focused on inequality. All of them, Republican, Democrat, some of them a little more, some of them a little less, but this is at the center of American politics right now. You also see a renewed focus. 1,200 people were arrested protesting the Keystone Pipeline in 2011. That sparked rejuvenation in the environmental justice movement, which, of course, as we've spoken about numerous times on the show, environmental factors and economic factors, of course, come into play every step of the way together. The article is really saying, stop and look around for a moment. When you look at certainly American politics, the inequality is getting worse. It's true, but
the U.S. is one of the worst countries for that.
It is. It's
as is Israel.
Actually, Israel is second only to the U.S. in terms of inequality, and there it is getting worse. But the focus is there, and this article argues that actually it's beginning to turn the tide.
Well, staying on inequality, you also have a very fascinating article coming from Mexico. And speaking about inequality, that is also one of the top 3 countries for inequality, if not the first.
Yeah, well, Mexico is definitely a place where you see a huge divide between rich and poor. But 2014, they made an amendment to a rule that said that only politicians who are members of parties could run in elections. So now you can run as an independent, and independents have been winning. In particular, this guy, Pedro Kumamoto, who won in just a state election, a midterm election, but he won with $14,000 in his pocket, which is a tiny amount, as we know, anywhere, and certainly in Mexico. But he won. He took it home, and he won because of this kind of wave, because this push for focus on income inequality, a focus on ending corruption and ending kind of protection of banks. He really took it home because of this change in tide.
Right, and I saw that article. They call this almost like a mini revolution.
Right, and it happened that there was a lot of this happening there. The governor of Nuevo León is in the north of Mexico, is also an independent. It's a big, big change in Mexico, and it has a lot to do with this renewed focus on ending corruption. 91% of respondents in a survey in Mexico said that they don't trust the government, that they don't trust political parties in Mexico.
And the last story for us today.
So this is an interesting one. Richard Branson of Virgin Everything actually took his company's policy for leave one step further than the government, and there they have pretty good maternity and paternity leave. But I actually was noticing the headline said Branson grants this great rule, and I was thinking to myself, shouldn't it be that the government has the best rules for protecting people, and that we're not relying on billionaires to kind of grant us protections or time to take care of our kids? Shouldn't those be public rules and not necessarily things that billionaires are granting us?
Well, that is an interesting point with some of the other billionaires that are deeply affecting humanity, such as Bill Gates.
Absolutely, absolutely. It's a real big question we're facing now as inequality pushes forward. Thank you so much for your insight.
We do appreciate it. That is all the time we do have for now today. Do join us again tomorrow for all the latest in global news and business. I'm Natalie Ehrlich. Thank you.